What can a small business owner do now when it comes to financial planning and preparing for their retirement?
Well, the one thing I always tell people is diversify. Don't look at just one investment vehicle. Spread your assets or your investments around. I think the biggest and last, I don't know if loophole is the right word, but let's just use loophole, would be life insurance, essentially, to draw down the largest amount of money from a corporation without effectively paying income tax on it or payroll taxes on it. And that's basically leveraging the investment in your corporation. You're allowed to claim your contributions as an expense. You're allowed to claim the interest on money borrowed as an expense. And you have the death benefit always there, right? At the end of the day, to pay back the corporation or pay back the insurance policy if there's no other means to do so, right?
Well, I do this a lot in my business, and we've done some work with some clients where the business owners has a significant amount of retained earnings. And we talked about using either a capital gain strip to get the money out. That's done at, say, 27%.
Right.
Or the client can pay a dividend of 48%.
Right.
But then there's this other strategy that is allowed to get money out of the business that you just talked about, where the business owner would then purchase a corporately owned life insurance policy. The money would then flow from the retained earnings into the policy, and he can grow that tax-free. But as you said, he gets to leverage it. He can actually borrow against that and even put the money back into his business and then get the tax deduction from the interest cost of that. He gets the write-off because he's invested back into the business. And I find that this is the one thing that the Liberal government hasn't tried to attack yet.